Good morning, students. Today we are going to solve a question of the Business Studies O levels from paper number 1. And the statement is Giovanni had been to see his bank manager to talk about the ways of financing the growth of his business. He wanted to open 5 new shops selling electrical goods such as the television and the radio equipment. The bank manager told him that he must think very carefully about the capital needs of this expansion, which would involve both fixed and current assets. The bank manager told Giovanni that he would need to see the accounts of the business, including a cash flow forecast, before the bank could increase its lendings. Okay. A's first part is explain what is meant by the fixed asset, and there are some things which are very necessary to mention whenever you are explaining the fixed assets. So concentrate. It is anything of the value. So this is the first thing, that any valuable thing that is owned by the business. So this is second important point, which gives economic benefit to the business for a period of more than 1 year. So these are the things which are necessary to mention whenever you are explaining the fixed assets. So any valuable thing owned by the business which can give economic benefit to the business for a period of more than 1 year. Is second part is give an example of the current assets that Giovanni's business would own. Current asset is any valuable thing which is owned by the business which can be consumed or converted into cash within 1 fiscal year. So according to the statement, according to the question given, the unsold stock of the television and the radio equipment are the current assets. A's third part is what is meant by the cash flow forecast. So cash flow forecast is a statement that records the predicted future inflows and outflows over a period of time, and this forecast is usually made for 3 to 6 months. So it is a statement that records the predicted future cash inflows and the outflows over a period of time, and cash flow forecasts are usually made for 3 to 6 months. This first part is explain 2 reasons why the bank manager would want to see the accounts of the business before increasing the bank lending to Giovanni. Here is the first reason. He would want to see the fixed assets of the Giovanni in case of the Giovanni cannot pay off the loans. So this is the first reason, that banks want themselves to be in the secure position, that if the businesses are unable to pay back their loans, so there must be some kinds of the fixed assets with the businesses which the banks can be able to grab in order to recover their loans. And the second reason to see the accounts is he will also like to see the sales and the profits to measure the feasibility and the economic futures of the Giovanni's business, as banks give loans to the businesses with good economic features. So this is the second reason the bank want to see the accounts of the business, to see the sales and the profits, to take an idea either the business is able to pay back their loan comfortably or not. So these are the 2 reasons. Second part is outline the factors. So as maximum as factors are required, so Giovanni should consider before deciding which method of the finance would be best suited for this expansion. First factor may be Giovanni must consider the amount required, as large amounts cannot be obtained from every source of the finance, such as the bank overdraft. So definitely he must consider which source of the finance would be suitable and possible for his business. So this is the first factor. Second is Giovanni must consider the time period for which he requires the amount, as expansion will take time and he will need to keep the finance for a considerable long time, because expansion always requires time, that cannot be done overnight. So all these sources which can lend money to his business will not be able to give them for a longer period. So the business must consider those kinds of the sources which can give them the loan for a longer period of the time. The third factor may be Giovanni should also look at the interest rate prevailing in the country. If the interest rates are low, it will make bank loans more attractive. So this is a very, very important factor, because the business will have to pay back the loan, and on the loan, definitely interest will have to be paid. So the amount or the rate of the interest is also very important to be considered. Definitely the business will consider those kind of the finance which will have low interest rate. And the last factor is Giovanni should also consider his business size and status before borrowing, as large amount of the loans are only given to the large firms. So definitely all the sources of the finance which are available in the market will not be able to give them loans, because different sources consider the size of the business. So definitely large amount of the loan will be given to only those businesses which are having larger size. So this is another factor which must be considered. Next C part is extract from the Giovanni's balance sheet. As at 1st November 2006, stocks, debtors, and cash are given, and this is very important thing that the cash is zero. So these are current assets. These are actually $110,000, and here are current liabilities. And these are $120,000. So you can see clearly that the current liabilities are more than the current assets. Okay, C's first part is calculate the current ratio for the business from the information given in the table 1. Okay, current ratio is actually the liquidity ratio that measures the business ability to pay off the liabilities in the given period of the time from definitely the assets. So here is the answer of C's first part. The liquidity ratio formula is current assets over current liabilities. So this is the formula for finding the current ratio. So current assets are 110 and current liabilities are 120. So solve it on the calculator, you will get the answer 0.9. Okay, C's second part is the liquidity position of the Giovanni's business good? Explain your answer. Because Giovanni's liquidity ratio is 0.9, that is lesser than 1. So it means the business is not in the good position to pay off the current liabilities, because if uneven conditions prevail in the market, so business will be unable to pay off the loans within the given period of the time. So look now, here is the explanation. Giovanni's liquidity position is quite poor, as he only has 0.9 current assets for each current liability. So current assets are lesser than the current liabilities, which means he cannot pay off his overdraft and creditors. Further, he has zero cash. This is very, very important, which can see from the statement of the business, that is having zero cash. So it means ready cash is not available. The business is highly relying on the stock being sold and the debtors paying in order to receive the cash. So if debtors are not able to pay their amount within period, or the stock is not sold due to some kind of the reasons, business will be unable to pay off his liabilities. So in case of the unsold stock and had bad debts, he will have a crisis and will not be able to pay off his current liabilities. Thank you so much.